Then we proceed on to do the adjustments for non-cash incomes and expenses. Adjustments for non-cash incomes and expenses. Cash incomes and expenses. So bold like that, and we double click over here so that now at least we can be able to now list the provider list right over here. The first one is finance costs. Finance costs. Finance costs. So we pick what is the finance costs. 17. You can see it's 17 there. So we pick plus that value. Then we proceed on to select depreciation. Depreciation right there. And the depreciation, we can get it from, of course, from the statement of financial position over here. If it's not there, we can check it at here. There is disposal over here. For, you can see the depreciation is over here, note number 2. Depreciation charge for the year was 43 million. So we're dealing with this year. We just pick the 43 million. Then we select loss on disposal of PPE. Loss on disposal of PPE. There. So do we have any working on PPE? Loss on disposal of PPE. We don't have anything right from here from our working. So we can check the additional information right over here. Property, plant and equipment. Property, plant and equipment held by Bermuda Limited are items of plant and equipment, are freehold premises. During the year ended 30th June 2022, items of plant and equipment which originally cost 40 million were disposed of, resulting in a loss. Here it is, loss of 6 million charged in administrative expenses. So loss on disposal of PPE, 6. You're seeing it's just going to be a positive value there. Then we proceed on to assess the amortization of intangible assets. Amortization of intangible assets. Amortization of intangible assets. So we just assess from the assets over here, the intangible assets, that is non-current assets. You can see the intangible assets given to us there is, for 2021 is 50 and 40. So we'll just get the difference between that plus that one minus that one there. So enter. You can see it's 10. Once we have that, we can be able to now include gain on financial assets at fair value. Gain on financial assets. Assets at fair value. Value. So we need to identify that. Gain on financial assets at fair value. So there is nothing over here. Financial asset OCI. That's not the one. So we need to identify that. And from the income statement, we can see the gain on financial assets at fair value. That given to us because it was a gain over here, but we need to reduce that gain on financial assets here. So we put minus over here, minus 5, enter. And I can see there's a slight error over here. Profit before. Put an E here. Before tax, like that. So once we have the gain on financial asset at fair value, then we can do the adjustments for incomes not correctly classified. So adjustments for income not correctly classified here. Incomes not correctly classified. Not correctly classified over here. So this one we can maybe perhaps, if you bold it, it will indicate it's a heading, but you can just try and italicize that and indicate that the adjustments for incomes not correctly classified. The first one is investment income. Investment income. So investment income can be identified from the income statement, or statement of profit and loss. So the investment income was over here, so it needs now to be deducted from over here. So plus, so we just put in investment income there, but it should be negative. So we should put negative plus minus that. It should indicate that that is negative 6. So those are the adjustments for non-cash incomes and expenses there. And from our working over here, this working over here represents the working for cash and cash equivalents. So cash and cash equivalents. Someone might ask, what were we doing by working out the 8 and the 89? So I can put that bolded like that. So this is the working for cash and cash equivalents. We proceed on with the cash flow statement. Adjustments for working capital there. Adjustments for working capital. Adjustments for working capital. So this format, put that like that. The first item is decrease in inventory. Decrease in inventory. Inventory. That. And inventory can be found from statement of financial position. You can see it's right over here. So you can highlight that in red with your permission. So we get the difference between the 176 minus 123. So we can just do it like that. Brackets 176 minus the 123. 3 there. That is obviously how an accountant would do it if you are perhaps maybe writing, having a narrative exam, writing it down. But because we are accountants, and someone should be able to come and check the formula based on the Excel. And once you click the Excel part over here, you should be able to identify. So it's plus the 176 minus 123. No need to show any working or side workings right over here besides the written part. Then we need to also assess the increase in trade receivables or decrease, increase or decrease. So are we seeing whether it's an increase or a decrease in trade receivables? So it's moving from here, which is the 2021, to this part. So obviously we can see that there's an increase. In the previous case, it's a decrease from 176 to 123. So here we are increasing. So increase in trade receivables. Increase in trade receivables. So plus, just do it. The 87 minus 95. So for format painter, as you move along like that, seeing it's going to be an increase in trade receivables, it represented as a negative value. Next is increase in trade payables, increase or decrease in trade payables. So that should also be highlighted in red, like that. So let's see trade payables, like that. So the payables are right down here under current liabilities. It's from 3 to 7, so that's an increase in trade payables. So we can just drag that down, then we adjust trade payables. Increase in trade payables. So we just pick plus trade payables 100 minus 156 minus that value. Format, yes, I can format it. I just want to do it for completeness. I do not want to do it everything once everything is done. Then we move ahead and try and identify whether we have anything to do with cash generated. Is there any other adjustment required? Nothing. So we move on to cash generated from operations. Generated from operations. So we just add them. Like that. So we just get them. You see this button here, auto sum? You can just add them. Minus like that. So if it's increase in trade payables, we are saying that it should represent an actual increase in trade payables. So we are saying it should be plus trade payables, this value minus, sorry, I did it the other way around, that value minus the 100 over there. So we should be able to have 56. So the cash generated from operations should be the sum from the beginning. It should not just be the sum from there. So what we do is that we can just change this and okay, so we just say plus sum, click there from the beginning, there up till there. Close the brackets, enter. You can see it is cash generated from operations. So now we move ahead and analyze interest. So the interest, we can see the interest has been given to us over here of 3. How do we calculate the interest, the final interest value, the interest paid? So it's this one, which is the interest at the beginning of 2021. Then you add these finance costs, and then you subtract the interest payable like that at the end of the year like that. So that now we can be able to include how much interest was actually paid. So interest paid over here, we are saying we get plus interest payable, which we're saying is right here, the 3. Then we add, so we are going to open this and put a negative value, open brackets, and then we put a negative value there, plus how much was paid, finance cost within the year, and then we subtract the closing value, interest payable. Close the bracket, enter. So we have the interest given to us there, interest paid. We move on to the next item, which you're saying is going to be tax paid. So the tax paid is going to be plus the tax you can see right over here under current liabilities. the income tax payable, you're saying is 34. Then we're going to get a negative value also for that, plus how much tax was actually paid within the year, income tax expense, 47 right there. And remember, it is a negative value over here, so I think I'll need to also change the formula. Then we deduct the tax closing value, closing balance here. Saying we're getting 32. So we'll need to adjust this part over here. We subtract. We should get 62. Why are we doing that? This adjustment of negative, because we actually deducted. You can see here the 47 is actually a negative value. So we first of all add the beginning tax component 34 plus a positive tax component over here of 47. But you see now you get, this is already negative, so I need to subtract. So I can be able to negative, 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 negative will give me a positive value there. So this is the value for the tax paid. Format painter there. Then we assess the net cash received from operating activities. Received from operating activities. So how do we get the net cash from operating activities? Over there, we just get the sum of cash generated from operations from there. So plus sum from here to there. Net cash received from operating activities. It's 205. We move ahead and talk about the cash flow from investing activities. From investing activities. Cash flow from investing activities, we need to put it in a similar format to these adjustments here. The first talking point over there is investment income. Over there from the income statement plus investment income is right here, you can see it. So you highlight that. Sorry, I can just first of all highlight that as investment income. There, not highlight, just put it as a format painter. That as 6. So plus that value, enter. Our next item is now purchase of PPE, and we need to see the working for that. Purchase of PPE. Purchase of PPE. That. Plus the purchase of PPE should be, from the working over here, we can see the purchase of new asset right over here. So the working purchase of PPE, the purchase of new asset, that value should be included. And that value should be a negative value. So first of all, you include it like that, because it represents an outflow of cash, plus minus 165 there. We move ahead so that we can be able to get either the purchase or sale of financial asset at other comprehensive income. So we are saying we have the purchase of financial asset at other comprehensive income, at OCI, other comprehensive income, right over there. So what you need to take note of, is that we had initially, we can just go to other comprehensive income, this part right over here, I highlight over here, and also the other comprehensive income right this part over here. So at the beginning of 2021, we had 10 as far as the financial asset was concerned at the beginning. And at the end of the year, this was at the beginning of the year, this is at the end of the year. So at the end of the year, we had 22 as financial assets at other comprehensive income. Now, within the year 2022, there was a reserve there that was provided for, and it's actually represented by this value right over here, the 2. So because this was what was provided for as a form of equity reserve, this value plus that value will give us a total of 12. But because this is the closing value, we will need to ensure that these 12 will actually close, or ensure that we will be able to end the year at a value of 22. So the balancing figure, or the difference between the sum of this financial asset at the beginning of 2022 and the financial asset equity reserve minus this 22 should be able to give us 10. So in essence, I'm saying this, I can just work out over here, plus that value plus the 2, enter, give us 12. But at the end of the year, I can put it right over here, at the end of the year was that value there. So we need to ensure that this side and this other side actually balance. So what do? The difference between this 22 and 12 will be termed as the purchase of financial asset at other comprehensive income. And we can be able to pick plus that value minus that value. We get the purchase of the tune of 10. And this, because it's a purchase, we are saying that we are going to include a negative value there. So plus, you can say, or minus 10, because I've already explained it. So just put minus 10 there. So once we've understood the purchase of financial asset right over here, we can proceed on to identify the proceeds on sale of PPE. Proceeds, pardon me, on sale of PPE. Proceeds on sale of PPE will be given based on the additional information. Additional information number 1. Property, plant and equipment held by Bermuda Limited are items of plant and equipment and freehold premises. During the year ended 30th June 2022, items of plant and equipment which originally cost 40 million were disposed of, resulting in a loss of 6 million, charged in administrative expenses. These items had a net book value of 28 million as at the date of disposal. So this is very important, because you're saying that the difference between the net book value and the loss over here will give us the proceeds on sale of PPE. So we select plus 28 million, then we subtract the 6 million over here, which represented a loss, that we get proceeds on sale of 22. Now we can be able to get the net cash used in investing activities. So net cash used in investing activities. That. And getting the net cash used in investing activities is just the sum over here plus sum. So you select the first one of these values, of these items there. Close the bracket, enter. 147, negative 147. Now we can move to the final part of the cash flow statement, cash flow from financing activities. Cash flow from financing activities, financing activities. So this one will just, for consistency sake, put it like that, bolded, like that, we bold it. Then we identify the items. There were new issue of shares. So issue of new shares. Over here. We come to our working, the very first working over there. Rather, not the first working, but the issue of new shares was done over here, the third working over here. We can see there was issue of new shares of 60. So we click that over here, put a formula, plus there. And you can even see it's written there, increase due to new issue, 60. Then we proceed on to identify the dividends, if there are any dividends paid. And we check the balance sheet over here. So there's nothing to do with dividends over here on this subsection over here. So we can just move up as we move. Yes, retained profits. You can see over here. And when we talk about retained profits, we talk about now monies that have actually been kept up. There's a dividend payout ratio and there's what we call a retention ratio now. So these retained profits relate to the dividends. So we have this 91, so comes plus dividends paid, the 91. Then we add if we have any component in the income statement over here. We don't have any item on the income statement. We can then proceed on revaluation reserve if there is any element of revaluation reserve, profit for the year, profit for the year. Over here, the 67 over here. Then we deduct now this closing balance over here. So closing balance, the 121 here. These retained profits right over here. So I think the formula didn't pick very well. So plus the 91, and then we add this value here, and then we deduct this 121 right over here. Enter. So this should be negative, and we just put in a negative sign right over there. Enter. Like that. Dividends paid. And once we've done that, we can be able to see clearly that we don't have any other item from financing activities. So we get the net cash received from financing activities. Net cash received from financing activities. Activities there. How do we get it over there? We just get the sum of that of the new issue shares and the dividends paid. So plus sum like that. So we close the brackets like that. Plus that one plus that value. Get 23. So this value can be able to just maybe decide to underline it, that one. This net cash used, you can be able just to also underline that as well. And this one, just underline there, that. After you get the net cash received from financing activities, we need to get the net increase or decrease in cash and cash equivalents. Net increase in cash and cash equivalents. In cash and cash equivalents. That. So the net increase or decrease in cash and cash equivalents, we can get it from, we cannot be able to get it from this cash and cash equivalents right over here. We can get it from adding the three components of the cash flow statement. That is it. So we add plus, we get the 205, that one, plus we add the negative 147, then we add the 23. Enter. We can see we have 81. But we need to factor in the cash and cash equivalents at the beginning. And that is now where this cash and cash equivalents summary comes into play or into use. So we add cash and cash equivalents at the beginning. Cash and cash equivalents at the beginning. Like there, cash equivalents. Equivalents, that's correct, like that. At the beginning. And we can see the cash equivalents at the beginning is plus, we can go up over here. This is at the beginning, 2021, that value, enter. Then we factor in cash and cash equivalents at the end. Cash and, you can just put it like that. Then we now adjust this to the end. So this one, we can clearly see over here that it balances off. So we can just get plus that one plus that value will give us 89. So does this tally? So to check, we can have a check over here. Check. How do we check whether we actually am doing the correct thing over here? So we just check if this value, remember this value was gotten from the sum of those values there. So plus this value minus the one that we did here at the balance or at the beginning or at the end over here, 2022. If they're different, then that value should give us a value over here. So you can see, and we can just put the comma format over here to see that this check is indeed actually true right over there. So you can just put it like that, and maybe you can even just italicize that like that. So this is how we prepare the cash flow statement based on IAS 7 cash flow statement. And please make sure to always have these summaries over here indicated to you like so. So you can decide to even make it for presentation purposes. You can just make it like that. Put it like that. And this one over here should also be, maybe you can decide to put it in a big format like that. But now the outer part right here can be in a thick border like that. So this one can also be in a thick border outside, that for presentation purposes to your bosses, or for maybe PowerPoint presentation. There like that is going to be part of data visualization. So this is it, the summary ends right there. You can decide to put our outside format there, then we put the like that, and then the outside border over here. This should be at the center. So we just put center like that. Then this one should be indicative over here. Should reach at that point there actually. There, and then we put the thick outside border like that. So this is bold. So perhaps it may not reach over there. So what do we do because it's not reaching over there? We just come and click margin center. Then we redo it again until where it reaches there. So we can now merge and center at that point like that. So ladies and gentlemen, we hope you have enjoyed our session of being with us here at Manifested Publishers. We are here for you, and if you've got any questions, please you can be able to post questions on the comment section, and we'll be glad to answer your questions. Thank you for being with us. God bless you.